So you guys trade a lot of broken wing butterflies on your show, and customers are starting to do more and more of these things. And I think it's important to, because they can be traded as one trade, right? And the broken wing butterfly is kind of act like its own little animal and that's great. I think telling the story about what makes a broken wing butterfly broken is a useful exercise. Now, some of your viewers already know this, so they can just get a primer on this, but I think a lot of people have never thought about these strategies in quite this way.
I'm really looking forward to this, TP. I think you've done a great job putting this together. And it's pretty interesting when you look at it together. All
So
right.
let's go to the next slide.
Ooh, good visual graphics. Okay,
It is.
broken wing butterfly.
And I got to say, the research team did a great job. Kai over there did a great job putting this together. So as we're looking at what this position is, okay, you have the broken wing butterfly on the left, right? And it's a little bit of algebra. A little bit of algebra.
A little bit. But yeah, so I think that a lot of people are visual learners, and this is extraordinarily helpful to see this broken out.
You have the butterfly, the broken wing butterfly is equal to a regular butterfly, a 1 by 2 by 1 butterfly with equidistant strikes, and an extra short vertical.
I don't think people realize that when they're looking at this. This is kind of layering. This is synthetics, right? You can break it out. You're using three options in layering effect to create a butterfly plus a vertical spread.
Right. And this also, by the way, this also is true. This is true for either call broken wing butterflies, put broken wing butterflies, broken wing or uneven iron condors, whatever you guys call them. You know, the skewed iron condors. It's the same thing. So the way you think about adding in these extra short verticals works for all these sort of unorthodox spreads.
I want to make one point because I want people to see the visual here. When you're looking at the broken wing butterfly, now this is just, it can be set up differently if you want it to the other side. There's no risk to the upside. So you have that same peak potential of the butterfly, but on the butterfly, you can lose on both sides. With the broken wing butterfly, by adding that vertical in, you're eliminating risk to one side. I want it to be very clear.
Yes, that's the reason people and you put on these trades, is that if you get a credit for these trades, that credit protects you in one direction. Yes, you can lose on one side, as we'll see, but it saves you. In other words, it makes it a neutral to bullish trade in the case of a broken wing put butterfly. So there are all sorts of appealing things about it.
There are a lot of appealing things about it. Okay, let's get to the next slide.
But here's where people start to, this is the key to managing these broken wing butterflies. Okay. If you look across what those images are, okay, what the broken wing butterfly is, and I did a broken wing butterfly and just pulled up a stock. Tesla was trading, I don't know, $430 or whatever it was. It was higher or lower when I was doing this. So it was the broken wing butterfly is buying one 400 put, selling two 415 puts, and buying one 425 put. Do I have those strikes right? Because I can't see them.
It looks right. So I just want to be, if it's trading, you said it was trading around 450, you're going to go to the out of the monies for a put broken wing butterfly. So if it's you take them and you're going out of the money in the puts.
Yes, right.
Okay.
So what that is, what that broken wing butterfly is a long 405, 415, 425 put butterfly, an equidistant strike. So 10 points in between those strikes of the regular butterfly. Okay.
Mm-hmm. Yes. And in this, TP, you're going to correct me if I'm wrong. Butterflies, you're paying for them. Broken wing butterflies, you're taking in a credit. And by taking in a credit, you're actually adding a little bit more risk, you can see, to the one side, but it's the side that you want the risk on.
Yes, that's exactly right. And where does that credit come from, Liz? The short 400 or 405, 410. The 405, 410 put spread.
Yes, because it's
Okay.
technically two spreads together, right? So they're just kind of layered on
Yes.
top of each other.
You can trade this as one trade, but embedded in it is two trades. In other words, you've got your butterfly, you've got your short vertical. And this is how a lot of the people who've been doing this a bit, this is how they manage them. Okay. So they'll put on their broken wing butterfly, and they will then, so as the day commences, they'll say, oh, wait, I can buy that short put spread back for a debit that's less than the credit I took in for the butterfly, for the broken wing butterfly. And what they then have is the butterfly, the long butterfly, on for a small credit. They can't lose.
Which is a fascinating way to look at it. Things have to go in your direction in order for that to happen. They have to be moving in the appropriate direction in order for you to take the risk off the table. If it's going against you, you have to sit on it.
And here's my point. That short vertical is what drives the trade. Let's go to the next slide and we'll see why.
Phoebe, you're doing a great job. Okay, let's take a look at this. So
we start on top. You have the broken wing butterfly, and it has some says delta to it. It has some theta to it, and it has a max risk to it, right?
Yep.
And so as you go down, what I did is I compared those, and then the butterfly, and then the short vertical. As you can see, okay, the broken wing butterflies P&L, its deltas, its thetas, are the sum of the butterfly and the short vertical.
I've never looked at it like this before. It makes sense, but I've never looked at it like this, where you're breaking it out. X plus Y equals Z. Delta, the 2.33 minus 0.18 equals 2. They're the sum.
Right. And if you look at the Greeks of the broken wing, if you look at the Greeks of the broken wing butterfly, the majority of them are created by that short vertical.
Yes, they're heavily weighted by the short vertical.
So that's why I'm saying the short vertical drives the trade. Well, let's go to the final slide. And if you want to read these points, Liz.
Okay, the short vertical component drives the trade. I like that. The short vertical has a larger delta and theta than the butterfly and comprises most of the risk of the butterfly, which is fascinating. So the short put component is the meat and potatoes of the butterfly. The broken wing butterfly benefits from high IV that reduces price of long butterfly and increases the price of the short vertical.
Right.
So high implied volatility is a butterfly spread.
You can find them all over the place, but essentially what you want to do is find a situation where butterflies are relatively cheap and the verticals are relatively rich. That happens more often when volatility is high, because it's, and we can go through that in another discussion about why that's the case. But I wanted to make sure people understood that the broken wing trades, and this works for the call side, the put side, broken iron condors, things like that. You can manage those embedded short verticals to leave you with a better risk reward profile. That's how you do it.